Your credit score is one of the most powerful numbers in your financial life. And yet many people don't fully understand how much control it really has. Today, we're going to break down exactly how your credit score can shape your financial opportunities and even limit or unlock your future goals. Whether you're applying for a mortgage, getting a new phone plan, or even trying to land a job, your credit score plays a major role. Let's start with the most obvious: loans and interest rates. When you apply for any type of loan, whether it's a credit card, a car loan, or a mortgage, the lender looks at your credit score to decide whether to approve your application. But it doesn't stop there. Your score also determines the interest rate you'll be offered. A higher credit score usually means lower interest rates, which can save you thousands or even tens of thousands of dollars over time. For example, someone with a credit score over 760 might qualify for a mortgage at a significantly lower rate than someone with a score in the low 600s. Over 30 years, that difference in interest could cost or save you the price of a new car or more. Now let's talk about renting a place to live. Landlords often pull your credit report to see if you're a reliable renter. If your score is low, it could hurt your chances of getting approved, especially in competitive markets. Even if you do get approved, you may be asked to pay a higher security deposit or get someone to co-sign the lease. In some cases, a low score can result in outright rejection, no matter how much income you have. Your credit score can even affect your job prospects. Some employers, especially in fields like finance, law enforcement, or government, may look at your credit report as part of the hiring process. While they don't see your actual score, they do see your credit history. If it shows a pattern of late payments, high debts, or other red flags, that could raise concerns about your responsibility and trustworthiness. For jobs that require handling money or sensitive data, this can make or break your chances. Another surprising area where your credit score comes into play is insurance. In many states, auto and home insurers use a credit-based insurance score to determine your premiums. That means if you have poor credit, you might pay more for insurance, even if you have a perfect driving record or have never filed a claim. It doesn't feel fair, but statistically, insurers say credit scores correlate with risk. And so, your score becomes another factor that quietly drains money from your wallet if it's not in good shape. Now let's move on to utilities and cell phone service. If you've ever signed up for electricity, water, or a new mobile plan, the company likely checked your credit. A good score can mean no upfront costs. But with bad credit, you may have to pay a deposit or be denied a postpaid plan altogether. That can make basic services more expensive and less convenient. Credit cards are another area where your score has major influence. If your score is high, you're more likely to qualify for premium cards with better rewards, lower interest rates, and generous credit limits. These cards can offer cash back, travel perks, and purchase protections. On the other hand, with a low score, your choices are limited. You might only qualify for secured cards that require a deposit, with fewer perks and higher fees. That means fewer tools to manage your finances and build credit in the future. Buying a car or a home is one of the biggest financial decisions most people make, and your credit score directly affects whether you can make that purchase affordably. A low score might mean you can't get approved for a mortgage at all. Or if you do get approved, it might come with a much higher down payment or interest rate. The same goes for auto loans. Some people end up in subprime loans with high monthly payments simply because their credit wasn't strong enough to qualify for better terms. Even if you're starting a business, your credit score matters. Small business owners often rely on personal credit to secure startup capital or open lines of credit. If your credit score is low, you might not be able to access the funding you need to grow your business or survive slow periods. that can put your entire venture at risk before it even gets off the ground. So what can you do to take control of your credit score? Start by paying all your bills on time. Payment history is the single biggest factor in your credit score, making up about 35% of it. Next, keep your credit utilization low. That means not maxing out your credit cards and ideally using less than 30% of your available credit. In fact, staying under 10% is even better. Avoid opening too many new accounts in a short period. Every time you apply for credit, a hard inquiry is added to your report, and too many of those can hurt your score. Also, try to maintain older accounts with good histories, because the length of your credit history also plays a role. Finally, check your credit reports regularly. You're entitled to a free credit report from each of the 3 major credit bureaus every year. Reviewing your reports can help you spot errors, detect identity theft, and stay on top of your financial picture. In the end, your credit score isn't just a number. It's a key that either opens doors or locks them. It can save you money, help you achieve your goals, or stand in your way. But the good news is, you have the power to manage and improve it. And with the right habits and a little attention, you can make your credit score work for you, not against you.